I also want to understand from you, what you see as the impact as far as flows are concerned. And, the market has its own estimates of anywhere between $20 and $25 billion on account of the inclusion to the JP Morgan index. But how do you see that, and what could the possible implications be as far as the rupee, etc. is concerned? If we were to see significantly higher flows, is there a consideration that the government has to try and slow things down?
I don't try to guess the market. And as far as inflows are concerned, our focus is on keeping the borrowings to the minimum required and continue on the path of fiscal consolidation. As we are aware, this year the market borrowings are expected to be of the order of about 11 lakh crore and little more than that particular one. And we have been coming down every year from that path. Now, a new set of investors have shown interest. They've said that they would like to come in. Welcome. That shows their confidence in the Indian economy. But how much they will bring in, when they will bring in, it is their call. So we don't take any view on that particular one. As far as inflows, making an impact on other factors, like either on the rupee or on the exchange reserve, those are separate set of exercise. These are not that just inflows in the government paper make that influence. Even when the FPI comes, that has an impact. What happens, how much of current account deficit we have, what kind of remittances which we have got, all of them have a role to play, that how much of, what is the play between our current account, capital account, what will be the net impact on the rupee movement, etc. So it's not just a single intervention, a single set of investors make that change. So is a far more complex or a far more comprehensive discussion.
Yes, I would imagine. But you talked about the government borrowing. Likelihood of being able to bring that down for this year?
So first of all, where the deficit has come down, or from 5.1 estimate to 4.9%, the borrowings indicated from the market borrowings have not come down to the extent of 0.2% of the GDP. It's just about 15,000 or 13,000 crore it has come down. Why? Because we expect that in the small savings, collection may be less than what we had estimated 4 months back or say 5 months back. The reason being, we had looked at it for the past 12 months. We do adjust them for the few quarters where it happens to be a little more than what in rest of the year. But our assessment is they would be less than what we had estimated earlier. That's why the estimates of small savings are less. But these borrowings are something which we monitor every quarter. There will be next review will happen towards the end of the second half of September, when before announcing the calendar for the second half. Then we do another exercise of revised estimates in the month of December. And if you find that small savings collections are significantly more than, or of sizable size, more than what we had estimated, obviously we'll have to bring down the borrowings from the market. It has been done in the past, where a couple of auctions in 1 or 2 weeks were not taken up. So same strategy will be followed this year itself, because again the idea is there's no point in borrowing and keeping a cash. And that is a net cost to the government, because on cash we get a very little returns.
On budget day you said it's not the occasion to talk about the interest rate trajectory. We're not in on budget day today, so let me try again. Seeing what the Fed is expected to do and the commentary coming in from the Fed, as well as what the MPC has said here, what's the expectation as far as interest rates are concerned, and how sensitive do you believe the economy is likely to be to any potential cut this year?
See, first of all, that's an issue for the monetary policy, and
North Block always has a view, sir.
North Block, we don't comment on the monetary conduct of the monetary policy. It is being done very deftly. It is serving Indian economy very well, and decisions on monetary policy, and to that extent I'll very clearly say, are based on what are the needs of our economy, while what others do is a factor there. But at the end of the day, at the decision-making point, it is what is need of our economy, what is in the best interest of our economy, that is what gets taken. Some of these actions, like what the fiscal policy stance is, also goes into that decision-making, and that gets reviewed as part of the MPC and that is a body which is supposed to take those
So what are you
decisions.
expecting, one or more than one cut this year?
As I say that I don't judge the work of others.
Both you as well as the Finance Secretary said that tax measures alone cannot perhaps address the issue as far as the F&O surge is concerned, which is a cause for concern and has been red flagged by all regulators as well as the government as well, and we've seen that action being taken. Is there an ongoing conversation with the regulator on potential measures, what kind of measures, what next steps?
The conversation between regulators and the government happens on a continuous basis, and it is not just about a issue specific. It happens on a
But on this issue specifically,
while that conversation happens, the regulators do what the regulators are expected to do. We in the government do what the tools government has got. And that conversation happens at appropriate level, but not in the public forum.
But that conversation is ongoing, and is there a possibility that the next steps that you have alluded to, that the government has alluded to, are on the anvil? How imminent are they?
As I mentioned it, I do not guess what the regulators are going to do, and that conversation is a continuous process. That should be understood, is that it is not that we identify an issue and start discussing it. It is a very comprehensive set of conversation happens about the state of the economy, state of the sector, which are the areas, which are the emerging opportunities are there, which are the emerging challenges are there. It is not about issue of the day. It is also seeing that what can be an issue tomorrow. We try to, to the best of our ability, try to see that what may be a potential issue tomorrow which may require a resolution, or even a potential opportunity. So that kind of a conversation happens. It is a very continuous process, and it happens in different ways, in personal meetings, in different modes of conversation, which happens in different forums. It happens.
Economic Affairs Secretary, always a pleasure. Appreciate you joining us here on CNBC-TV18. Many thanks for your time, and we look forward to checking back with you on many of those areas where the consultation process is underway. In some cases, the consultation process will start now, and we look forward to getting more details from you as that process kicks in. Thanks very much.
Thank you very much. Thank you.
Well, with that, it is time for us to wrap up this edition of the Budget Verdict. From all of us here from the Finance Ministry in New Delhi, goodbye and thanks for watching.